What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day for the overall stock market, for the economy, for Tesla, for the Fed's policies, because we have CPI coming out, and this is going to be huge once you see the context that I'm about to break down. Now, before I break anything down about CPI and talk about how it may affect Tesla's share price for tomorrow and beyond, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 2.5 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So Tesla was up 0.6% for the day, just a tiny bit green in the after hours, and overall it did bounce off that 163 zone. Now, even though Tesla did close a little bit in the green, SPY did close very flat, just somewhat in the red, but the QQQ and Apple and Google and many other stocks out there did manage to close quite green. So the real question is, what's going to happen for tomorrow? Is the market going to continue to rally? Is Tesla going to bounce? Is Tesla going to crash? This is going to heavily depend on CPI. The CPI report is going to be very important. I will break down like different levels about CPI. I actually have them pinned out right over here. But before I do that, I need to give you guys a little bit of context about what could actually happen. Looking at the overall data, we have quadruple witching for Friday. This means that we have millions of options expiring at the same time. As I mentioned previously on this channel, the market makers want the market to pump. It's going to benefit them big time because we have over 3 million, 3.2 plus million puts expiring on Friday alone. And it's going to benefit them a lot if they actually bring more of these calls in the money and cause pain for the shorts, causing a mini short squeeze. Because max pain's at $399 on SPY, this could lead to a bit of a rally, but this will depend on CPI and also news affecting the banks. When it comes to the banks, we saw another big bank collapse, that's Signature Bank. This is the third biggest bank failure in US history. The banks are continuing to collapse because of their greed and their failure to manage risks appropriately and efficiently. In doing so, these banks have been investing heavily into bonds and also treasuries. And as rates have gone up, it's really killed their assets that they're actually investing in thanks to people depositing into the banks. So now that the regulators have been so lenient on the banks and allowed them to actually do this, many banks have been not managing risks and actually taking on major risks from startups to IPOs, and this is just killing them. It's absolutely destroying them in a market like this. But it's not just because of rate hikes. You have to remember this. It's because of once again, their greed and their failures to actually look at the situation and take appropriate actions. So now what's very important is it is not just Silicon Valley Bank. We're actually seeing a lot of banks taking hits. The finance department is just getting destroyed. And if businesses are failing to actually see banks destroy their money, and if it's not as secure, this could lead to a very devastating problem in America. Now, does this mean that bank run has to happen? The answer is it's a possibility. And this could actually lead to some major withdrawals. But because of the whole 2020 pandemic, the regulators have deregulated the banking industry in a way where banks can now lend out tons of money, 100% of the money that is actually being deposited into them. And this freedom that they have had is now being exposed. And it's actually led them to not just collapse, but they're going to need lots of help in the process. Now, Janet Yellen has come out and she actually said that, and this was in the very beginning, that the US government will not bail out Silicon Valley Bank. But later she kind of flip-flopped with the Fed, as now we're seeing the headlines saying that the US government is stepping in and they're going to help people be able to have access to their money from Silicon Valley Bank. Now, in a joint venture with the Fed and the US Treasury, and also the FDIC, which is insuring about $250,000 per account, we're actually seeing them now coming together and once again changing the idea, changing the plan. Their plan right now is to take and I quote, decisive actions to protect the US economy by strengthening public confidence in the banking system. They're trying to stop people from withdrawing all their money in in masses, excuse me. And they're trying very hard to get as many people as possible to, keep on investing the way they have been and actually support the banks in the process. So this is basically like them bailing out the banks again, just not directly with the same terminology. But they're not just bailing them out in terms of just, sending them billions and billions of dollars. They're also working with regulators that are going to help try to find buyers for Silicon Valley Bank. So this would actually benefit American taxpayers a lot more. I know that it was stated previously that they don't want American taxpayers to have the burden of this. So it would benefit us a lot more if we end up seeing some kind of entity come out and actually buy into these banks. But here's where CPI comes in. What's happening is, okay, the banks are struggling, they're starting to collapse, and it looks like Silicon Valley Bank and Signature Bank are just the start. There could be a lot more banks going through something very similar. So Goldman Sachs is coming out and they're saying the Fed needs to hit the brakes on the interest rate hikes. They need to pause in March. And this is leading to lots of controversy. So now what is the Fed going to do? Okay, they're being incentivized to pause because of the banks collapsing. That's what Goldman Sachs is saying. But then inflation is still crazy high. So how are they supposed to pause? Right? It's a massive mess. And this is why CPI is so important. In my opinion, if we just ignore CPI right now, the Fed has to raise rates more because CPI has been high for the month of January. Inflation was very hot based off PCE and then also based off the PPI report that came out very recently. So inflation is still hot. We just need one more confirmation of it to determine if the Fed is going to continue to tighten very hard or if it's going to be less harsh and maybe tighten to a less stringent extent. Looking at the CPI data, we have seen a bit of a decrease over the past couple of months, but it has been going up starting this year. Looking at the latest expectations, we're expecting CPI to rise about 6% for the month of February, and then core CPI to be up about 5.5%. Looking at some data, we did see gas prices actually increase a bit, so there's a good chance CPI could be a little bit hot or very close to expectations, maybe a tiny bit higher. But I'm not as confident, not as sure about core CPI. So I want to just give you guys just my prediction and also give you guys the different ranges just to give you guys preparation for tomorrow. If CPI comes out and it's between like 5.5 and 5.8%, that's going to be pretty good. And this has to be looked at in unison with core CPI. But just from CPI's standpoint alone, this is going to be good if it's actually quite lower than expected. Remember, the expectation is 6%. If it's 5.9 to 6.1%, that's going to be okay. And I do believe it's most likely going to be somewhere around here, maybe around like 6 to 6.1%. That's my guess. And then always be prepared that if 6.2 to 6.4% comes, that's going to be pretty bad. And anything above 6.5% is going to be horrible. Even 6.4% would be pretty horrible, but we just don't want this to be way too high. But as I mentioned before, I want to note that Joe Biden said he's very confident we're going to get a good CPI report. I'm not saying that he's right. I don't even know if he's going to be right about that. I don't even know if he was just exaggerating, right? Who knows? But if he did know something, that could be a hint that's not going to be as bad as some people may be projecting or predicting. Because what I think is we might end up getting a mixed CPI report. When it comes to core CPI, the expectation is 5.5%. Anything between 5 to 5.4% would be pretty good or even great if it's very low. 5.5 to 5.6% would just be okay. 5.6 is not that bad. Just a tiny bit higher is still like not as horrible. And anything above 5.7% would be pretty bad or even horrible the higher it goes. My guess is I think that the overall CPI is going to be just a tiny bit hot because of gas prices going up. CPI is going to include food and energy. That actually makes up a big part of it. So does housing. And I really believe that overall, right now, we did see a lot of spending. We saw an all time high in credit card debt for the month of February. And we're continuing to see a low unemployment rate. So the real contraction, the real pain, and the real effects of the rate hikes are still yet to be shown. And I still believe that because of the hot jobs numbers we got, CPI might be a little bit on the hot side, just a tiny bit hot. But when it comes to core, I'm not as confident about core. I'm guessing it might be very close, maybe even a little bit low. Very, very close to this, right? But around 5.5%, maybe a tiny bit low, very, very close to expectations. That's just my guess. And you have to remember that this is coming out about 1 hour before the market opens. So we have quite a bit of time on our hands. We don't truly know exactly how it's going to play out. So when this comes out, there's going to be a lot of time between the time it comes out and when the market opens. That's why you have to be ready for this just in case. Now, what is my guess for the markets? What do I think is going to play out? What do I think is going to happen? The answer is I believe that the market's going to make a very big reactive move to what we actually see. If CPI is very low, the market could actually rally, and not just rally because of inflation cooling off. It's also because of this new narrative that was just created by many other banks out there that the Fed could pause very soon, especially in March. Am I saying they will? The answer is no. I don't really think they are, but the odds of it happening could actually increase if we get a low CPI, right? The Fed might actually try to slow down just a little bit to try to help out the banks during a time like this when more and more banks are continuing to collapse. It's very, very possible. Now, I also want to note to everyone that if we see something like this play out, we have to look at the share prices of these different companies during very difficult times. Uh, we're going to make a very bullish move if we get a good report. And if the market does continue to rip, this could actually benefit market makers. And we could even see a mini squeeze thanks to the options chain. For resistance on SPY, I'm going to be watching 389. That's going to be a major resistance between 389 and 390. If we break above 390, 393 becomes possible. And if we break that, then we could actually get closer to about 400 or even a little bit higher than that. Now, if we end up getting a really bad CPI report and the market crashes, then we could actually break below 380, and then we're likely going to retest these lows from December around the 374 zone or even lower than that, right? And then on the weekly chart, if SPY breaks below the 200 EMA, this 364 zone, I expect it to break new lows below October lows, meaning SPY is going to likely go all the way down to 320 if we break below 364 or the 200 EMA. That's a very important level on the weekly chart. I'm just giving you guys a bit of a heads up just in case, but I'm not counting on that. Instead, I just want to wait and see what the data tells us before coming to any conclusions, so be prepared for anything just in case. Now, for the triple Q, what I'm essentially seeing is the triple Q is showing a little bit more strength than SPY, and we're not really forming a bit of a divergence right now. I am actually seeing signs of this thing maybe trying to bounce. So if we're bullish, I'm going to be watching this 200 EMA on the daily. This 295 area is going to be very important. If we break above that, we have some resistance around this 298 to 300 zone. If we retest all the way up to 300, we have to break 300 to try to get to 304. That's the next very important level. Now, if we end up turning bearish off CPI, it's very likely that we're going to end up coming all the way down to 285. If that fails, then 281 could come. The dollar is continuing to tank because of the banks collapsing. This does not mean that the market has to rally and rally and rally as of right now. But if the dollar continues to tank like this, it could be correlated with the market depending on what happens with the banks. But once again, the dollar is coming very close to a very important support zone around this 102.5 level. I do think it could actually come a little bit lower to get there depending on the banking situation. If that happens and this thing does end up getting a big bounce, this could lead to some downwards pressure for the stock market later on. The VIX is in a very strange place because the VIX got a nice rally to 30, then it failed, and then overall it still is green as the market did try to rebound too. And the VIX looks like, to me, from a technical standpoint, it looks a little bit overbought, and there are good odds that the VIX will come down, meaning the market might pump, causing that, but I don't know for sure. Right, I know technicals are suggesting this, but I can't really rely too much on them because CPI matters a lot more. On top of that, looking at like Apple, I'm going to just talk about Apple real quick. Then I'm going to talk about Tesla. Apple is also holding up pretty well. I think I just lost Apple. Apple's looking pretty good too. It's actually holding up from the last time I checked it at 150. It's at a very important level, kind of in the middle right now. If Apple comes down, you have to watch. First off, we have this gap way down here in this like 146 zone. Also, major support at 144.7, which is the 0.382 retracement. If we're bullish on Apple, we have to break above 152.5, break above that, then we have 154.5, then the 156 zone, right? We have quite a bit of resistance above, but we could end up retesting those levels if we get a good CPI report. Once again, I don't truly know, which is why I'm going over both the bullish and bearish possibilities. For Tesla, what am I seeing for Tesla? We got a really nice bounce today. Tesla was trying to hold up. In my previous video, I told you I thought Tesla would try to bounce a bit, but I wasn't entirely sure because of the banking situation. We did actually come down pretty hard in the beginning. We got a nice gap down, followed by a nice bounce. The algos remained bullish, buying up the markets, and Tesla ended up just filling this gap and then continuing to go. We also rejected off this major trend line of resistance that I mentioned earlier as well, very close to almost 178. Now, what I'm essentially seeing from Tesla is this. If we're bullish, if the market gets a nice push up tomorrow, Tesla has to break above 178 and retest 180. If you could break 180 on Tesla, if Tesla manages to do that, it has the potential, to go all the way up to 185. And if it breaks 185, the next important level is going to be right where this gap is, 187 for Tesla. We could see Tesla actually squeeze if we get a very good CPI reading. Once again, it's going to be fueling the whole narrative of the Fed pausing. There's no guarantee that's going to happen, but temporarily we could see Tesla break to the upside. Now, if Tesla's bearish, if we get a really hot CPI, if it's way higher than expected, Tesla could actually come all the way down to retest this 168 to 166 zone. And if that fails this time, yes, it could come all the way down and try to retest 163. There's no guarantee it's going to hold if CPI is that hot. And it's eventually going to start filling the gap all the way down to 160. Now, if it ends up filling the gap around 160, there's a very good chance it's going to continue to keep going. And if that ends up happening, we have a lot more downside to come. As I showed you guys in my earlier videos, Tesla is looking very distributive right now. And whether we do get a bounce of CPI or not, I don't really think it even matters too much for the medium term because eventually Tesla is going to likely come down to fill this gap. All right. So I just want you all to know that for the medium term, for the next month to month and a half, I believe Tesla will eventually fill this gap to the 140s. I really believe it. All right. But before we end up coming down to fill this gap, CPI does not have to be the thing that causes it, especially because of quadruple witching for the week. There's a chance Tesla could try to bounce first. The market might bounce first before we do see more downside. All right. So please be ready for that just in case. Now, do I know what's going to happen? I don't know. I want to make that as clear as possible. I do not know what's going to happen tomorrow with CPI. But I can give you guys just my guess, just for fun. I'm going to give you my guess. All right. So what I think could happen is I think we're going to get a very mixed CPI report. I think it's going to be very volatile in the beginning. And based off this overall setup, it looks to me like we're almost forming. Tesla was looking like it was trying to form a bottom here. So maybe we get a bounce. Maybe we turn bullish thanks to it, just maybe. And maybe this is going to be a very temporary, like bullish rally that might last. Maybe Tesla could break 180 and just keeps going. I mean, I would really hate to be wrong when I say that, but it's just my guess. I would love for that to happen, but it all depends on the data. And I don't truly know. I'm hoping the market gets a bounce. I really want that to happen. I want the market to keep going temporarily because of the fact that for the longer term, this would be a very good short entry for a lot of people. And I'm thinking that maybe Tesla could actually get it. For SPY, I just want to note that we do technically have a bullish divergence, a hidden bullish divergence that's developing right here on, let me see, the hourly chart, which is actually, where is this? All the way here. So we do technically have a hidden bullish divergence. It's actually easier to see on the daily chart. So like right here, you could see we're making a much lower low on the RSI. The RSI is very low on SPY. It's almost an oversold territory, but So far, SPY is actually making a higher low than the low we actually made back in December. Very similar to like this. So this is just an example. I'm not saying SPY has to do this, but this is just an example of what it looks like, right? This is a hidden bullish divergence where the price is making these higher lows, but the RSI just keeps going lower and lower. So there's this divergence. Very similar to SPY right here. Look at where the RSI was when we bottomed around this time. And then look at where the RSI is down here. The RSI is just going lower and lower and lower, but the price is making a higher low so far. If this holds, that's assuming we hold this so far. Now, this could all be invalidated by CPI. If the market crashes off CPI, all of this could just be invalidated. But this is telling me that there is a good chance the market might try to hold up for this week or even try to bounce a bit. All right? It's a little bit more likely. You also have to factor in the fact that Joe Biden is very confident we're going to get a good CPI reading, and also because of the fact that we have quadruple witching coming out for the end of the week. So I do believe, even though anything could happen depending on CPI, the odds are favoring the market trying to hold up and maybe even bouncing. I'm a little bit more inclined to thinking that because of quadruple witching, and also because of the fact that right now we have some bullish technical signals that are basically perpetuating. So, with that said, thank you all so much for listening. Please take my prediction with a grain of salt. I do not know what's going to happen. I have to repeat that again. Don't invest based off what I said. And we just have to wait for tomorrow. Once the data comes out, it's going to be much more clear. But just be ready. Very big day tomorrow. CPI comes out before the market opens. Be ready, remain calm, cool, and collected. And just remember, for the long term, I'm still very, very bullish for Tesla. I'm super, super bullish for the long term. I know I talk about how bearish I've been for quite a while. And as you can see, Tesla has been on a bit of a downtrend overall. So you have to remain a rational and intelligent investor in the process. But just know, yes, there's going to be downside for Tesla. There most likely will be for the medium term. But for the long term, I'm still very, very bullish. Thank you all so much. Tesla to the moon, as the long term is still very bright. And peace out.